Large cap stocks. Large cap stocks are stocks of companies with a market capitalization of 20 billion Nepalese rupees or more. These companies are generally well established, well known, and have a long track record of success. Examples of large cap stocks in Nepal include Nepal Life Insurance Company Limited, Nabal Bank, Nepal Dursanchar Company Limited etc. Mid-cap stocks. Mid-cap stocks are stocks of companies with a market capitalization between 5 billion Nepalese rupees and 20 billion Nepalese rupees. They may have a shorter track record of success, but they are generally considered to have higher growth potential than large-cap stocks. Investing in mid-cap is an excellent way to simultaneously diversify and enhance the performance of anyone's investment portfolio. Small-cap stocks. Small-cap stocks are stocks of companies with a market capitalization below 5 billion Nepalese rupees. These companies are typically younger, smaller, and less established than large-cap and mid-cap stocks. They may have a shorter track record of success, and their businesses may be more volatile. Examples of small-cap stocks in Nepal include most of the hydropower and finance stocks. Growth stocks. These companies may have high revenue growth rates, expanding profit margins, and strong earning growth potential. In general, growth stocks are attractive to investors who are willing to take on higher risk in exchange for potential higher returns. Additionally, past performance is not a guarantee of future results, and growth stocks can be volatile and subject to sudden fluctuations in price. Value stock. A value stock is a stock of a company that is considered undervalued by the market based on its fundamental characteristics such as earnings, dividends, book value, and cash flow. Value investors typically look for these types of stocks that are trading at a price lower than their intrinsic value. To identify value stocks in Nepal, investors typically analyze financial statements and ratios such as price to earnings ratio, price to book ratio, dividend yield, and return on equity (ROE). IPO stocks. An IPO, initial public offering, stock refers to the shares of a company that are offered for sale to the public for the first time. When a company wants to raise capital by going public, it can issue IPO shares to investors in exchange for their investment. Dividend stocks. A dividend stock is a stock of a company that pays regular dividends to its shareholders. A dividend is a portion of a company's profits that is distributed to shareholders as a way to provide them with a return on their investment. Dividends can be paid in the form of cash or additional shares of stock. Non-dividend stocks. A non-dividend stock refers to a stock of a company that does not pay regular dividends to its shareholders. Instead, the company may choose to reinvest its profits back into the business in order to grow and expand its operations. Blue chip stocks. Blue chip stocks refer to the stocks of well-established and financially stable companies that are leaders in their respective industries. These companies are typically large-cap stocks with a history of stable earnings growth, a strong balance sheet, and a reliable track record of paying dividends. Blue chip stocks in Nepal are often considered to be less risky than other types of stocks, as they are less likely to experience large swings in price and are viewed as a safe long-term investment. And the last but not the least, penny stocks. These companies often have a low market capitalization and are considered to be high-risk investments due to their lack of liquidity and the potential for manipulation. Penny stocks are often viewed as speculative investments because they have a higher potential for volatility and can be more difficult to research and analyze compared to larger, more established companies.